They're not ready for use yet, but I can give you a preview if I can.
Okay.
Let me
We
share my screen.
love previews.
But here's what we got so far for GDP.
Here it is. Core PCA came in as expected. Goods trade balance, some other things here, things that we don't really pay too close attention to. So, okay, so news came out essentially as expected. So this is why you're probably not going to see a big reaction to this. Yeah, so there you go. You can see the euro blipped lower and just immediately reversed. So now we're seeing a little bit of drive to the upside here on the euro. Very interesting there. Let's also pull up the pound on the side just to see what the pound USD driving up as well. You know, it's not a big move at all, but as you would expect, if numbers come out exactly as expected like that, you're not going to usually see huge moves in the market to respond from that. Dollar yen, euro dollar, making some pushes. So we'll see. Inflation's still sticky, and month over month again, staying the same. Don't forget options. What is your next stock ETF to trade? Mike, because the stock and options world is closed right now, I don't have any trades for today. But if I do take any trades, I'll share them in Discord. If you are in our Discord channel, it'll be shared in there. If you're not in the Discord, we'll drop the link there for that. Okay, so guys, I'm going to probably, because now we are seeing some movement on euro dollar, I'm going to take a look around, see what else we can see. Dollar Swiss, dollar CAD. Look at that, dollar CAD making a drive lower here recently. Aussie dollar making a bit of a reversal here. There's a Kiwi, you know, 11 pips, not very much here at all. Bitcoin's down 1%. Yep, euro dollar, dollar yen, pretty much erasing the moves that they did make. And this is why, guys, remember that when we are talking about news, right? News, it's all about expected versus actual. So if the actual comes out way over here, then yeah, you're going to see a big spike. If the actual comes out way over here, yeah, you're going to see a big spike because the market suddenly says, oh, we're all standing over here and the popsicle stand is all the way over there. Everybody rushes over there to get in line, right? That's why the market moves, right? It's a simple, stupid analogy. But think about this way. If everybody's standing in line right here, and then the ice cream or popsicle, whatever stand pulls up right there, nobody's going to move. Nothing happens, right? Everybody stays in line at the current spot. So silly analogy, but that's the concept is, again, it's all about expected versus what actually comes out. Which broker to use in the US? I have several brokers that I'll share in the description of this live stream. You should be able to see it right now. And if you would like to use the one that I use WeBull to trade directly on TradingView. It's very nice. So I can like watch my positions, etc., right there in TradingView. We'll drop the link to WeBull. That is the broker that I use. So check that out. Euro dollar up slightly. I mean, if you're somebody who's watching gold and like you're really a gold person, you probably just want to watch the euro today, as it will maybe give you some similar correlation right now. It's not great though, because recently the dollar and gold, although usually negatively correlated, there's been not as much of that recently, right? I'll show you what I mean by that. What is your favorite pair to trade? I don't really have a favorite currency pair. I mostly trade gold and indices. But if I'm trading currencies, usually it's just going to be like euro dollar. Like I'm just trading basically on the dollar. But maybe dollar yen. Dollar yen probably is my favorite one. Dollar yen or euro dollar, one or the other. Anyways, so check this out. This has been kind of confusing. So here is your 4-hour chart compared to the 2, right? Usually, not all the time, but usually when the dollar's up, I gotta sneeze, hold on. Usually when the dollar is up, gold would be down, right? But that's not really the case right now. Right now, what we see is that both are advancing higher. And so why is that?
Market analysis, free trading courses, EdgeFinder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
The reason for that, I've gone over it a couple times in my videos, but to keep it kind of simple here, the reason is because the dollar looks strong, not because the Fed is hawkish, but because other central banks are coming out more dovish than the Fed. So suddenly the dollar looks relatively strong, but all central banks are starting to look dovish. All central banks looking dovish, not all, but almost all, right? Most of them, very good for gold. So there are these things where if you understand fundamentals, these things won't be so confusing to you, right? A lot of times these are really confusing concepts. Why the heck is the dollar going up with gold's going up? Well, I just explained it to you. The dollar looks strong only because the other currencies look weak because they're going to cut rates sooner. That's the idea of the market. All of the central banks racing to cut rates. Well, gold just loves that. That's why gold is super bullish and why we've stayed long gold, right? So I want to say something, a lot of times with these streams, where we have like a quiet day, people will be like bored of the markets. But I want to just invite you to, on days like this, I love days like this because it gives me a chance to work on things, right? Because I don't have to kind of like worry so much about like constant market movements. It's the same reason why I love like weekends for if I want to get something done in my trading. It's very nice to be able to do that. You get some time to yourself. Also, I do have a video coming out later today. I filmed it this morning. It's on its way, but we've got coverage for the TFT situation. So pound USD, I wanted to pull that one up. Pound USD. Let's go full screen actually. So we'll go full screen, GBP USD. All right. Okay. So pound dollar, while it probably won't move very much for the remainder of the day unless Jerome Powell says something big, which he is still speaking. So we're still technically live today, even though it's a quiet day. It could still be volatile as well. Suddenly, right? Area of interest would be for me if price were to poke up into this resistance zone, this 50% retracement, especially with EdgeFinder confirmation. I don't mind that trade. I think that could be an interesting one. Perhaps this pound dollar uptrend has kind of cracked, and that might actually even line up nicely with this trend line here. I don't know. We'll see. Maybe a little bit of a pullback could come into play. Yeah, it might be interesting.
Yes, actually on Nasdaq, I've been holding the market, I think, since around this level. So unfortunately, it's been playing around the same level. So I've been expecting it to go up. As you saw, US30 was going up. Also, S&P, it was going up. Only Nasdaq, it was the one that it wasn't performing very well. But I think maybe we have few factors that affected Nasdaq. We have the DOJ that is starting to sue Apple. That was not really good.
Yeah.
But over time, I think maybe that will just disappear, and I think we're going to see the market going up maybe next week.
Kenzo, you mentioned Apple there with the Department of Justice. So for those of you guys who trade indices or understand it, one thing that I always appreciate about Kenzo coming on the show, Kenzo, you always bring with the indices, not just the indices themselves, but also what's going on underneath. So you mentioned that we've had some drama in Apple stock. And yes, of course, if you guys trade SPX 500 or S&P futures or NASDAQ or NAS 100, whatever you trade, if it's an index, right? The index is a basket of stocks. And those stocks, especially the big ones like Apple, if they have bad news, sometimes it can be really useful to understand that. I actually agree with you, Kenzo. I think that this news in Apple could be overdone,
Yes.
right? We're seeing some concerns about, the Department of Justice has basically accused Apple for having a monopoly on smartphones and their whole environment. They think that the iOS is monopolistic and all this sort of stuff, and
Yes.
that has been creeping shareholders out of their position in some way because of what that could mean in terms of costs or perhaps any even legal changes that have to make or happen. But I kind of agree with you. I think that it's not going to really. We've seen this happen in the past with big companies, but like Microsoft and things like that. They've had these, oh, you're in a monopoly accusations before. But it does seem like you said that right. I think that they usually kind of
Yes.
shrug it off over time. And the market says, whatever, slap them with a fine, and let's continue to churn out money. These things are cash machines. That being said, Apple
Yes. Yes.
growth has been a little slow. So I am curious if we can see a bit of a turnaround story. And to your point, if this lifts, so will the Nasdaq and the S&P, right?
Yes. Yes. So on that, while we are still on that, April, I think they're going to present their case or some. I think it's this week, maybe Wednesday, something like that. That maybe might be positive. Maybe we might see some very good reversal as soon as possible. So yeah, I think it's not really a bigger of a deal, even though they can actually try to neutralize them one way or another. I think they already have a bigger fan base, so it's not gonna be easier. Even if they change here and there, I don't think I will see actually Apple just going down aggressively. So yeah, that is just those things. They actually always happen.
Yeah. So it will be interesting to see. There's been, a couple names in tech. Another one is like Adobe, right? ADBE. This is another big kind of US tech name that has sold off here recently. And I know I asked my video editors what they use, and they love the Adobe products. And I think a lot of people really love the Adobe products. So it's kind of interesting to see 23.5% down on this company. If it
Whoa.
keeps going down, I kind of like the company. It might be interesting to watch it going forward.
Hmm.
But yeah, I think you're getting some sell-offs here. I think also what's been interesting too is I think that if the market's going to rip, if it's going to continue to make its move to the upside, it needs its leader to continue to run.
Yes.
I'm a history kind of guy, Kenzo. I like history a lot, and a lot of times during like history, when like
Yes.
the big founding leader of a company or not a company, like a country or a company or a any sort of establishment, when the leader is no longer in the picture, usually it results in some drama, right? Sometimes the followers can pick up the pieces and continue the rally, but most of the time there's some struggle, like when a Roman emperor would die or something. There's a big
Yes.
fight
Yes. Yes.
after that. But what's interesting is in this rally, the reason I bring that up is that NVIDIA right now is the leader of the rally. And if
Yes.
this leader of the rally drops, can the market rally continue? I think in the short term, the answer would be no. But if this can continue to push higher, then the rest of the market probably will too. It's really why NVIDIA, I think right now, is like the whole, it's putting the whole market on its back right now.
Exactly. So, and that while we are still on Nvidia, I think Nvidia was going to be maybe 2 times that if some of their AI was also sold in China. It was going to be a different story. I heard that they were still doing a short like a medium performing also
Yeah.
AI like GPUs that can go to China, but we know this US and China tensions. But I think at the end of the day, if they can actually continue able to produce those GPUs that they can go to China
Yep.
based on those AIs, I think we're still gonna see some very crazy push. Also, AMD is also on the same page. Intel is trying to catch up. So it's not actually one company. Currently, NVIDIA, I think it's 80% market share of this AI thing. But maybe next year, the next of next year, Intel, AMD, and the other ones, they will try to catch up. But that will actually help this push of AI move. It's not actually only on NVIDIA. Even the other ones, they will try to catch up. And that is actually good because now companies, they can have alternatives which are actually affordable. At the end of the day, that will keep pushing the market to go even higher.
Yeah, and Kenzo, you mentioned a lot there that was worth mentioning, but I wanted to add to your concept here with the Dow Jones. So the US 30 has done, it's actually outperformed the last few days. And I would actually say part of the reason for this is that we are now really, it seems like, closing in on rate cuts. And if rate cuts really do start to happen, I saw something that was really interesting. It was a study about the performance of different sectors following the first rate cut.
Yes.
And following the first rate cut, the sectors that typically perform, and again, I don't have the stats in front of me, but just from the top of my head, from memory, a lot of the value sectors typically performed well following rate cuts. Because during rate cuts, once the Fed starts to cut rates, the question will be, are they cutting rates too quickly? Are they cutting rates not fast enough? Is it because the recession is coming? Is that why they're cutting rates? Do they know something we don't know? So some fear will creep in, I think, when rate cuts actually begin. Because now that news is behind us, like the right now we're in the rumor phase where it's like rumor of rate cuts. This is exciting, but then when you actually start to it's like when you have a gift under the Christmas tree. It's very exciting before you open it. Sometimes you open it up and it's like really exciting. Other times you open it up and it's not what you were really hoping for. So I think that's where the Dow, as you mentioned, actually could outperform. In my opinion, I actually like the Dow a little bit more than the NASDAQ and S&P in the event that we actually get rate cuts, because some of the more safe areas of the market, stable big companies that are on the Dow, could do well. Do you agree with that, or do you think stay with NAS?
No, actually, you're right on that. So mostly when we start to talk about rate cuts and stuff like that, you will see US 30 performing very well. Also, sometimes also S&P 500. So on NASDAQ, it's actually quite too specific. Actually, tech companies, they are afraid of this news. So they are not actually stable. So if you want something which is quite stable, I think US 30, it's actually very, very safe when you trade. Yes, sometimes it can be aggressive here and there, but for these past 2 weeks, you can see it was performing very well. These moves were quite clear. I don't think this was going to confuse anyone. And with the rate cuts, most likely we will see Dow Jones trying to go up. NASDAQ will try to come and catch up with that. Sometimes the move can be aggressively, very aggressive, but most likely already Dow Jones will be way far, you see. Even before when they were talking about rate cuts, I think it was around November when they started to talk about rate cuts. I think it was November, December. US 30 was the first one to actually break out. If you still remember around these levels, then NASDAQ did try to catch up. So on NASDAQ, the market was just consolidating around this level, and US 30 was already going, you see. So it's safe because there are banks in US 30. So those banks, they actually feel the pain of rates when they are high. Yes, sometimes they can make interest rates, but the problem is they lose customers because now you can't take loans because they are afraid of the higher rates. You see.
Yeah, and Kenzo, I want to show you this chart. It's fascinating. To your point there about how you just mentioned that the Dow Jones was the first one of the three to actually break back to all-time highs. And many traders who are with us will remember that, or they might have this memory that the NASDAQ just outperforms, that the NASDAQ is just the best one. But if you go back a few years, and I want to show you this to everybody who's watching, look at this. If we started back on, let's just pick this date. Let's just assume for a second that on this date, November of 2021, if you had bought the NASDAQ instead of the Dow, you went long NASDAQ. What the chart is the QQQs, which is the NASDAQ, in proportion to the Dow Jones Industrial Average. When you compare the two, over that period of time, the NASDAQ actually has underperformed the Dow Jones.
Yes.
So everyone remembers during this run, oh, the NASDAQ is just better. So if you only ever looked at, indices in the last few years, and many people have made this mistake, they've only looked at indices recently and thought, oh, just buy the NASDAQ, it's just the clear winner. But recency bias is super dangerous in index trading because, again, the Dow Jones over the long period of time, look at this, you can go even further back over the very long time. Neither one of these has massively always outperformed. Now, for a lot of the stretches of good times in low interest rate environments, the NASDAQ has outperformed. But over the very long term, the Dow Jones seems to be a pretty solid bet just as well. So I don't know. What do you think about that, Kenzo? Do you think that there's possibly a bit of a rotation back coming? Or do you think the NASDAQ could continue to outperform? That's the question. I guess we keep coming back to that same idea. But if we start to see rate cuts, is it possible that the Dow actually kind of fires back and continues to rally too? Frank, I was just looking over some of the new charts here. And for some of the EdgeFinder users, we've been building a lot of new features. But Frank, tell us a little bit about this these new PMI data charts, the retail sales charts. I mean, obviously, we know what that is, but what was your thought process? Because you were kind of the one building this stuff behind the scenes.
Sure. So we added all these new charts to the EdgeFinder so we could put them in the score. Now we have manufacturing PMI and services PMI. We take the actual numbers and the forecasts and the revisions, and we see the change. So we go off of where PMI is moving on month-to-month basis, and then we score it like that, and then you get visuals on that and retail sales. But like a lot of economic numbers on here, you get revisions, so we had to add that as well so you could see where things are actually moving, because especially in NFP you'll see some numbers that are just way off from the revised. So I'm assuming when April's numbers come out for the NFP, 275 is not going to be it's not going to be the same number. It could be much higher, much lower. So,
well, if you look at this yellow line, pretty much throughout history, it's kind of interesting. It's like almost always revised, jolted around a good bit each month. So, I'm glad that we got that added. So, what we did too, as you were mentioning, was this yellow line theme pretty much across the different pages that we've been adding will show you the revisions. So if you're an EdgeFinder user and you want to go back and just kind of see the revisions as well, you can always just reference it. We're trying to make these charts standardized across the EdgeFinder, and they look really, really good. So awesome stuff on that, Frank. Yeah, go ahead.
I was about to say, Giles and I just finished wrapping up the GDP numbers.
Oh, sweet.
They're not ready for use yet, but I can give you a preview if I can.
Okay.
Let me share.
We love previews.
But here's what we got so far for GDP. It's color coded based on beats and misses. So blue is obviously good, red is a miss in GDP, and then white is just unchanged. So we have this. You can look at which months are doing better than others and where GDP is moving over time. I think you can go back like 10 years. I think Joe said that. So you can go 10 years in the past. But once this is up and running, we'll have look at all these different colors.
Yeah.
But yeah, eventually this will be up for use.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.